you guys hear me? That looks like it's working. Okay, all right. Good morning, everybody. Thanks for joining here. It's actually kind of funny, when we were talking about our plan for this panel last week, the title was How Investors Are Attacking This Bear Market. And I guess Bitcoin just never got the message because it decided to go on a tear on Monday and Tuesday, and it's continuing this morning. So I think my first question was going to be, like, what are the strategies that you're seeing when it comes to a bear market? But it probably makes sense to begin with exploring why Bitcoin is up so much. But even before we get to that, I mean, maybe Afonso and Stefan, why don't you guys each just take a minute, introduce yourselves to the audience, and talk about what you do.
Okay, maybe I can go first. Good morning, everyone. My name is Afonso. I'm the head of innovation at Banco BPI. And one of my roles is exactly to accompany everything that's going on in this crypto markets, blockchain, and try to understand how from the traditional side of finance we adapt to all of this, and we build on top of all of this.
Right, morning. My name is Stefan Kimmel. I'm the CEO of M2. M2 is a fully regulated crypto exchange and investment platform out of the UAE in Abu Dhabi. So we offer everything around trading, buying, selling, spot and futures, and as well as our yield-bearing products, which are in the bear market the most popular ones. So for instance, we offer earn plans with yields of 10% on Bitcoin, 10% on ETH. That's kind of a key thing we do. And super excited to be here as well, as we are trying to get licensed globally as much as possible wherever regulation exists. And Spain happens to be the next country where we're filing for a license. So very excited to be here today.
Great. So, Afonso, let's start with you. I mean, what's going on from your perspective? And in particular, I'm interested in some of the questions your clients are probably asking you about the drivers of this rally and in particular, its sustainability.
So I think that we come from a couple of difficult months, right? That's why we had the title of bear market, which is also, we were discussing before the panel. It's normal, right? New type of asset class, a lot of different stuff going on here, be it from the technology side, be it from a more financial side. And asset classes have ups and downs, right? And I would say that from a traditional finance perspective, we have a lot of clients asking about this space. Should I be in this space or shouldn't? It's difficult to time markets, okay? I could have exactly this same conversation if we were talking about equities or bonds, right? And I think that we need to take the conversation out of that part of, is it going up or down? Mm-hmm. And just deciding if you want to have exposure to all of this, okay? Short-term factors to why it went up so much since the beginning of the month, really no idea in reality.
So I know Victoria kind of did a survey before we began as to kind of where everyone's from. If it's not obvious, I'm from the States, from Philadelphia specifically. How many of you are from the States? If I could just see a quick raise of hands. Okay, so just a small handful. In the US in particular, the narrative surrounding this rally is it looks like the SEC is finally going to approve a spot Bitcoin ETF, the white whale for the entire industry. We saw it about 2 weeks ago when a trade pub published what turned out to be a false report about the BlackRock offering being approved, and now that we're starting to see real progress again, in the US at least, that's the main driver. Stefan, I'm curious, like, do you agree with that, or is there some other current underlying this bump that people are missing?
No, I mean, the short answer is absolutely the key driver. Even the last 2 days, I think the pump we've seen is mostly around news regarding the ETF. I think if you look at the bigger drivers, though, it seems like the space is in an inflection point. You see the first 2 years after Bitcoin started, it was all in a macro environment of quantitative easing, declining interest rates, partially negative interest rates. So there was a lot of excess capacity that was pumped that didn't have anything else to go and was pumped into the crypto space, which led to a lot of devaluations we saw then. A lot of the dump that happened the last 2 years was the opposite. So interest rates were going up and money and liquidity was withdrawn from the market. Paired that with all the problems and issues that happened inside of crypto, and then changes in regulation, a few other things. I think we're now at an inflection point where this is about to shift. We have a lot of the in-house problems being washed out and taken care of, or being removed and resolved. We have a clearer picture on regulation everywhere except the US, I'd say. And that's given a lot of confidence and clarity and trust and security to investors, as well as VASPs and those offering services. And finally, even the quantitative tightening seems to come to an end. I don't think we see quantitative easing very soon, but at least the tightening is coming to an end. So this is a perfect scenario for fresh money to enter the space, and specifically institutional money entering the space. And that brings us back to the ETF.
Right. So in the U.S., MICA is a big deal. I mean, I think many people that I speak with kind of look towards Brussels with just a sense of awe and I think jealousy, given that, in the U.S. right now, we've had a couple of bills pass out of committees in Congress, but obviously since Congress right now doesn't even have a speaker, those pretty much have zero chance of becoming law anytime soon, whereas MICA is going to go into effect at the end of next year, which is going to be here sooner than we think. I mean, Stefan, just staying with you quickly, what impact do you think the implementation of MICA will have on the investment environment in Europe? And in particular, I'm curious about coins and assets beyond just Bitcoin, but into some of the more altcoins and esoteric assets that perhaps investors, especially professional investors, may have more comfort in allocating towards with this regulatory clarity.
So in short, the impact is huge. I think MiCA gives that clarity, it gives certainty in the space in Europe. It allows institutions to enter at a whole different level. Let's bear in mind the space so far has been predominantly driven by retail and speculation. Of course, the magnitude of institutions entering is many times bigger than that. So and they need regulation, otherwise they're not even allowed to invest in crypto. To your question, I still see the vast majority, and all questions I'm getting, of institutions all around Bitcoin and Ethereum. That's just, I mean, as institutions, venture into the space, they'll go for security, they go for the least, let's say, questionable assets, and Bitcoin is the godfather of tokens, it's the mothership. There's least dispute about whether it's a commodity or an equity. It's just the most clarity around it. So those two I see by far the most interest.
Okay. Afonso, what do you think?
So I think the European Union has been quite innovative in MiCA, right? Trying to lead the way here, and I agree with what Stefan was saying. So you have a lot of players that have interest in this space, but to do something here, they need the regulatory clarity. Okay. Maybe not the specifics, but at least the big picture. You need to have some comfort to make sure that you don't get into something and then you need to adjust. So I think that you have a number of players that will end up entering this market once MiCA is live. Okay.
And when you talk about regulatory clarity, I mean, there's two areas in particular that I think investors really want to feel comfortable with. One is understanding the tokens themselves and making sure that, for instance, insiders don't have too much control. There's not hidden pockets of money, that if there's lockups, they're going to be adhered to, so on and so forth. And then from the exchange perspective, I mean, we all saw what happened with the collapses of FTX and BlockFi and Voyager and Celsius, and I could go on. And that was really more of a risk management point of view. Which one do you think is more important to your clients, or maybe it's both even, but I'm curious your thoughts there.
I would say both. Okay, in different, almost equal weights. But I think that the key point is that with MiCA, you get like in the financial world, people are used to regulation, right? And you get sort of a updated blueprint to how capital markets function in other types of instruments. You are transposing that to the crypto space, to the blockchain space, to the tokenized asset space. And that gives a lot of confidence, even if you say, but maybe we could comply with all of this without having to have regulation. But for a lot of people, that part is still very important.
Okay. Stefan, I want to talk to you a little bit more about Ether. You mentioned it before, and I'm getting a lot of questions from my own readers about sort of the outlook for Ethereum, because there's a lot happening. I mean, we're a year after the merge. I guess we're 6 months or so after if after withdrawals were enabled. And I mean, right now the validator queue is pretty much close to empty. Transactions, transaction volume, fees, I mean, they all really kind of haven't moved too much this year. And we're seeing L2s, Arbitrum, Optimism, Polygon, Matic, ZK Sync, others growing. What is, do you think right now, sort of the investment thesis for Ether? And in particular, I'm interested in some of the metrics that you're looking at to kind of get a sense of if an investor is trying to allocate between Ether and some of these L2s, like what's the right mix?
Yeah, so I think the overall long-term outlook is unchanged. I mean, of course, as you said, it's underperformed against Bitcoin massively, especially the last few weeks, because of all the attention Bitcoin has been getting, whereas ETH definitely is still in the bear market. The on-chain activity, the active wallets, number of transactions. So the metrics you mentioned are the same metrics I would look at. On the L2s, between L1 and L2s, I mean, that's I think a matter of also risk appetite and upside potential you'd like to get exposed to. I think by all standards and means, Ethereum obviously is the largest ecosystem with the most applications and the most activity on it. And I would expect as well, as we see markets picking up, for Ethereum to be the next one after Bitcoin to take up more price movement. So in my view, that's still the safer bet, and probably also again where most of the institutions will go before they go into the L2s.
What are some of the use cases, the dApps that you think would drive this next era of growth in Ether and some of the other L1s out there?
Look, I mean, in the short term, it's obviously the ones we're seeing around trading, around payments, money transfer, and everything around trading and investment. What we're seeing now is around identity, which I think is super interesting. And then around gambling, I think is the obvious next one that is happening on Ethereum as well, like Yuga Labs, for instance.
Yeah, Afonso, what do you think there?
May I wait in? So, and picking up on, you just talked about regulation in Europe. There is another piece of legislation which is also interesting, which is the pilot regime for distributed ledger technologies. And I think this ends up connecting with Ether, okay? So if you talk about public blockchains, where you can build on top of, this ecosystem is still the most relevant one, be it Ether or L2s. So when you talk about an economy that can move, when you talk about a tokenized economy, okay, if you talk about tokenization of assets, equities, bonds, whatever, or payments, you see multiple applications being built on top of this infrastructure. Okay, so I think it's easy to be positive on that space because again, regulatory clarity, calm after the storm. So we have passed a lot of hurdles in this space. You see people picking up the interest, wanting to build on top of this, not only native blockchain initiatives, but other spaces entering, and this ecosystem has a lot to offer.
Okay, great. Afonso, are you getting questions about the halving that's going to be coming up in about 6 months or so from your clients? And if so, or if not, I'm curious your thoughts on kind of how that's going to impact the investment landscape for Bitcoin.
So imagine if, going back to what you were saying just a few minutes ago, if you start having an ETF that is publicly available, spot Bitcoin, it will change a lot of the investment thesis that you have in, be it private wealth management, portfolio management, be it for more retail investors. It will definitely be a game changer. So I think that if it passes, if it sees the light of day, it will have a lot of impact. Okay.
Great. Stefan, I want to ask you about sort of the yield generation strategies. I know you mentioned you offer some, and in particular, again, going back to last year with some of the bankruptcies and continuing this year, and how do you manage that in a responsible way? And in particular, in this heightened interest rate environment, I mean, here in the States and then also in Europe, I mean, there are safer ways to generate decades-high yield, just buying treasuries and other types of government securities. I mean, what is the demand? What does the demand look like for those types of products? And how are you able to offer yields like 10% and so on, the higher than you would get typically in from some of the more traditional investments.
Yeah, but that's obviously the question we get the most. How do you generate the yields? I mean, to answer the first half of your question, I think with more interest or higher interest available in traditional finance, just in term deposits or treasuries, those who don't want to put everything in crypto, which most people don't, you could still look at this from an overall portfolio allocation. Yeah, it's more interesting to have some of it perhaps in traditional vehicles, and then another allocation that is more risk oriented and is seeking higher returns in crypto. To the question of how we do it, so in essence, we have an in-house asset management team that mainly does three different things. Of the money it's allocated into those earn plans, we invest some of it in Bitcoin mining. We're partially owned by the largest Bitcoin miner in the world, so that gives us access to enough capacity and rates to generate those yields. The second one is our in-house trading team. We do algorithmic trading in options and futures as well as market making. And the third one is on-platform lending, fully collateralized. So what's important for us in terms of the learning in previous years, we keep everything in-house. We don't give it to third parties. We don't put it on DeFi because of all the risks that are there. So we're trying to minimize the risk as much as possible.
Okay, great. I have like two more questions, and I want to leave a few minutes for Q&A as well. I want to ask about NFTs. I mean, Afonso, is that something that you're getting any questions about? Any interest in? And I think NFTs, even more traditional, as much as I can use the term when it comes to crypto assets, have been hurt more in this market. So do you have any thoughts on NFTs?
Yes, so even more difficult space, right? So I would say that with NFTs, we were able to democratize the idea of digital property, okay? So the idea that there is real value in digital property, okay? And that part, from a traditional institution, it interests us a lot, okay? A lot of hype, okay? So we went now through a difficult cycle, but I really feel that there is a very big space for digital property, be it in the form of NFTs or others in the future, and that's a space that we are actually looking into, trying to understand as a bank how can we develop the infrastructure to be prepared for this.
So it seems like it's a lot more than cartoon monkeys and pixelated.
Yes, I would say that it's a lot bigger than that, and we are actively working on understanding how a traditional institution can actually be positioned in the digital property space, okay? Let's keep away from the monkeys for now. Yeah. And we are actually here with the partners that we are working with this. They are called Self-Focus. They have a stand here. It's interesting to pass there to see what's the perspective that Self-Focus is bringing to this blockchain.
Yeah, it's funny. I have three daughters. They're 7, 5, and 2. My 7-year-old, she's been asking the Tooth Fairy for Bitcoin, and the Tooth Fairy has obliged, and then she asked the Tooth Fairy for a Bored Ape, and she was very disappointed last week. Just real quick before I get a couple questions, Stefan, what are 1 or 2 projects or tokens that you find particularly interesting that are kind of flying under the radar?
That's a good question. I think all the ones that are interesting are not under the radar, at least none I can think of that are super secret and not flying.
Okay. Afonso, what about you? Is there anything that...
no investment recommendation specifically, but I would say that as always, I don't think it's a good way to make investment decisions based on being on a bull market or a bear market. Okay, you need to have stronger convictions in that. So
everyone's keeping their cards close to the chest, which is completely fine. Maybe they'll loosen up a little bit later at drinks or something. We have about 3.5 minutes. Does anybody have any questions? Okay, all right, we'll keep talking, but if anyone does have a question, then happy to bring it on. Going back to the ETFs, again, at least in the US, I mean, I'm just seeing all these crazy numbers, $30 trillion, $15 billion that are going to be thrown into a Bitcoin ETF when it happens. Those types of products have already been existent in Europe for years, and uptake has, I think, been relatively soft, especially for assets beyond just Bitcoin and Ether. I'm sure you guys have been following ETFs and ETPs and so on and so forth. Afonso, what do you think? What lessons can be learned from ETF and ETP adoption in Europe? That
I think it has to do with global acceptance. Okay, if you have something that we have it in Europe, you can do it in European portfolios. It's completely different than having something that you can do at a global scale. Okay, and when you talk about the passive management industry, ETF industry, a lot of strength and a lot of assets under management are in the US. Okay, so having it available in the US gives it a completely different push on all of this.
Stefan, what do you think?
Yeah, 100% agree. I mean, let's bear in mind 60% of global capital markets are in the US. So whatever happens in the US drives the rest of the world so hard that it just shifts the needle a lot more. Related to that, even the availability in European markets doesn't necessarily mean that European institutions immediately invest. I think we now also have a better overall macro environment and regulatory environment paired with the availability of potential US capabilities or US capital to really drive the needle.
Okay. In the minute and a half we have left, I'm going to try to finish by just asking each of you, not necessarily to predict when this bear market is going to end, but I'm interested in what markers, what signals you're looking for to kind of get a sense that the tide has turned and that either it's this upswing or a future one might be more sustainable.
I'm looking more into number of people that are active in the space. Okay, so a number of active wallets, number of institutions that are actively distributing ETFs with this sort of assets. So I'm more looking at acceptance than market value as a whole. I think that if acceptance is there, then the market cap naturally will have to go up.
Great. I think we have one question. Why don't we?
Hello, good morning, and nice to be here. Thanks for all the insights that you've provided so far. And I just had a question for Alfonso Fuzeta in regards to the how long or how could you give us an estimate on when would your bank provide Bitcoin services, crypto services, buy, sell, income withdrawals? Are you waiting for MiCA to be already in place? Are you already expecting to launch it before? And if else, how do you see yourself as your bank positioned in regards to other competitors, European in particular?
Okay, thank you very much for the question. So
it's an easy one.
It's a very easy one. Now, I would say that at this stage, we are not really worried with client product deployment. We are worried about being technologically ready. Okay, so we are in a learning stage where we want to learn as much as possible about the blockchain ecosystem, about the different solutions that we will need to be able to speak in the future. Product development for customers a little bit down the road. Obviously, MiCA and all the regulatory surroundings will help us with that, but a little bit more down the road. For now, more of an internal positioning thing and learning expedition, if you want. Thank you very much for the question.
Yeah, thank you for the question. Our time is up, but Stefan, I'll give you like 15 seconds if you have any thoughts on when you what you're looking for to signal the end of the bear market before we wrap up.
In my mind, the full bear market is over. We've reached bottom. And if you look at Bitcoin year on year, it's actually up. If you ask me short term, I'd say I'm horrible at short term predictions. I usually lose money when I try. So I try to get exposure and look at I'm more hodler than anything else. So look at long-term views, and that I'm super bullish about.
Okay, great. Well, thanks everybody for your attention, question. Enjoy the rest of the event, and thank you to the panelists as well.